Hey there guys, my name is Marcus, and in this video I'm going to compare SDIV comparing to DVYE. In this video I'm going to compare expense ratio, assets under management, fund overlap, holdings, and also dividend history and backtest performance of how well they were performing in past. Now, if you have any questions or if you know any other ETFs that you want me to compare, share it down below in the comments and I'll be really happy to do that. Now, of course, if you want to learn how we can make money with ETFs, I created a course and you will find the course down below in the description. So without further ado, let's start. Here we are, ETF comparison tool, and let's start. So expense ratio for DVYE is 0.49%. Expense ratio for SDIV is also pretty high, 0.59%. So let's say that if you would be investing $10,000, you would pay $59 here, and here in DVYE, $49. Assets under management are literally similar, 800 million comparing to 926 million in SDIV, so SDIV is winning here, but also they're both low, and average daily volume is 6 million comparing to 3 million. Again, SDIV is winning, but 6 million average daily volume is not high, let me tell you that. Underlying index is different. Number of holdings 99 to 95, and expense ratio, I already talked about that. Average spread in dollars 0.09 comparing to 0.04, and then we will look on the performance soon. When we look on sectors they are investing in, we can clearly see that financials in SDIV 55% comparing to energy, comparing to basic materials, which are 12 and 6%. Now, on the other hand, with DVYE, we see financials 28%, comparing to financials in SDIV 55, energy 14, comparing to energy 12, utilities 12, comparing to utilities 5, basic materials 11, basic materials 6 here. So primarily SDIV is focusing on financial sector, and here DVYE is more diversified. Now, when we look here on the holdings, many times you see that some of them are similar, but many of them are international and unknown companies to the US market. And we are going to also look on how well it's like different. So when I come here to fund overlap and SDIV comparing to DVYE, we see they are overlapping by weight 23%, and 26% of the SDIV 99 holdings we would find also DVYE, and 28% of DVYE 93 holdings are also in SDIV, and 26 number of overlapping holdings, and a lot of real estate we can find. So SDIV means DVYE, and we can find a lot of real estate. And you see the companies right here in which there are overlapping: China Power, International Terna, and I don't even know any of these companies, I'll be damn honest, because I'm primarily focusing on the US market. But yeah, this is what we can actually find here. Now, when we go further and when we look further, what we can find here, let's see that if you invest $10,000 straight away initial month, and we would be investing $500 monthly, and we would be reinvesting every single month, and we reinvest the dividends, let's see how much money we would make. DVYE, and look at this. We would make with DVYE, we would make by, I don't know how much is that, $17,000 more if we would start investing in January 2013. You can clearly see that first 2014 was really great for SDIV, and 2013, 14, 15 was really bad for DVYE, but then many times it was overperforming, so it was like up and down, round and round. So yeah, and now when you look on the dividends, this is also like, you see that the perform if you would compare it to like QQQ or something, this is madness to look at the graph like this in the past 10 years when we had like growth market. And now when you look on portfolio income here, the dividends and distribution were were reinvested, SDIV was much better every single year when we look on the dividends. But look at this, 2021, not that anymore. So that's something really interesting to see. So as we could see, what we learned from this video, $17,000 difference in portfolio growth, and the final balance, you would earn more money with DVYE if we would reinvest all the dividends. Now, when we'll go further and look on expense ratio, it's higher with SDIV. Assets under management is higher. Average daily volume is also higher. So that's another thing. Now they're overlapping by 23%. And primarily, if you look on a backtest performance, you see that final balance, you would earn more money with DVYE. I can't really say which one you should invest to. It's like up to you. I don't really focus on these ETFs because I don't like it. And I don't like focusing on emerging markets. And that's not my style. I love technology stocks. So I'm not going to really say that if you should invest into that one or that one. And let's go further and let's see DVYE. Yep, it's like the dividend is also really great here, but as you can see, it was better with SDIV compared to DVYE. Now, of course, you can see clearly here that even these performances, even for DVYE, is so good. But again, it depends if you want to invest into that or no. Now let me down below in the comments your thoughts on both of these ETFs. Share down below in the comments what are your thinking about ETFs that you want me to compare. And I'll be really happy to do that. And also, if you want to learn how we can make money with ETFs, you can also share it down below. And I don't know what else to say too. So in my course, you will also find how we can analyze portfolios, how we can what are some good choices to invest to, investment strategies. So in which I prepared percentages of every single to what you should invest if you want to invest into ETFs with combined with the dividends. I'm talking about leveraged ETFs. Then I'm talking about emerging markets ETFs. So everything important that if you buy it and if you test it, you will learn it all. And you will know everything how to operate in ETF world, primarily from the investing perspective, not about how to understand ETFs. That's there too, but I'm focusing more on what to focus on platforms that you can buy ETFs on. So all the important information you will find right there. So yeah, thank you very much guys for watching. I hope you are going to have a great day, and have a great day and goodbye. See ya.